morning, everybody. Estas here. Welcome to the June 18th, 2021 morning update video. Today, as always, we're going to break down the futures, my thoughts on the market, some stocks I'm looking at right now, my game plan for today, and we're also going to talk about some huge news from the Fed today. The St. Louis Fed President, James Bullard, which is moving the markets down this morning. So sit back, relax, take a sip of your coffee, and let's get right into the video. So look, the S&P futures, they're not looking too good. They're down about 0.7% right now. The NASDAQ futures are down. The NASDAQ 100 futures, they're down 0.6%. The Dow futures are almost down 1%. And the VIX is up 14%. So talk about volatility, talk about fear. It is here, ladies and gentlemen. This morning, the VIX is moving up, and we have silver up almost 1%, which is awesome. So we're getting a rebound there. And gold is up almost 0.3%, so also a rebound in gold. So overall, precious metals are pushing up. The VIX is up like crazy, and the major indexes, they are down. So what's going on? What the heck is going on? Why are the markets moving down? Well, St. Louis Fed President James Bullard says, quote unquote, put the dot for an initial rate hike in late 2022. And what is that? Well, that is sooner than expected. And you guys know, we had the Fed meeting a couple days ago, and Jerome Powell was saying, hey, 2023 rate hike. A lot of the people on the Fed board, the range was for a spike of about between 0.1% to 1.6% in terms of the Fed funds rate in 2023. Now, this guy's coming and saying, the St. Louis Fed president, he's saying, look, I'm thinking 2022 for the initial rate hike, which could be anywhere from a year from now, and he's saying late 2022, so maybe a year from now, 16 months from now or something like that. So that is shocking the markets. That's freaking out the markets a bit, and we can see SPY closed at 422 yesterday. Now it's trading at 417, so it's down well over 1%, and pulling up on this 4-hour chart, you guys can see now we're actually breaking under the 180 SMA here. We are not holding that point at a higher low, and by the looks of it, we might be pushing a bit lower. I'm not sure if this is going to cause a prolonged freak out in the market. It very well could. It's kind of too early to tell at this point. But overall for today, I want to see if we do end up recovering. Maybe we rebound over the 180 SMA at about 419. If we don't, though, maybe we push lower. So we're going to have to watch this 4-hour chart and monitor it. And Bullard also says there will take several meetings to get organized on the taper, and we'll have multiple healthy debates to see what is going to happen there. But look, guys, at this point in time, the market is riding heavily on 0% interest rates with all of these asset purchases as well, the 80 billion here, the 40 billion here, and the second that, the tapering starts to happen, and there's an analogy that people always use. It's like a drug addict, right? You start taking away the drugs and they start to freak out, you know what I mean? That is kind of like the market right now. You start tapering, you take away the bond purchases, the market's going to start freaking out. And, you start increasing the interest rates, the market's going to start freaking out. So that is kind of what we're seeing right now. And, it's too early to tell if this is going to cause a further sell-off today. But as of now, we're hovering under that 180 SMA, which is a bit worrisome in my opinion. QQQ, you guys can see this one is well above the moving averages. I'm not seeing any big problems here. We're down just a little bit, $3 pre-market, nothing crazy, down about 0.8%. But I would look to see if this pulls back to the 50 SMA on the 4-hour, maybe at about 340, 341. If that were to break, maybe we start pushing mid 330s, low 330s. So watch out for that when it comes to QQQ. And in terms of my positions, guys, and what I'm doing overall, I mean, look, I'm in 30-40% cash still. I haven't made many moves at all this week, and I'm just sitting tight. I have a bunch of open swings, and that's the truth of the matter. When you're in the markets, you don't always have to make a move every single day. Sure, maybe if you're watching these YouTubers, well, I guess myself included, but I'm telling you the real here, guys. But I'm sure a lot of other YouTubers, they're making you buy this or telling you to do this, or you're feeling forced to do something every day, or you feel like a failure. The truth is, you don't. That's not how it works. A lot of the time, it's the disciplined investor trader that wins long term, and by that I mean people that are able to sit on cash and wait for the right opportunity. People that are willing to not FOMO into something for the next best opportunity. And that's kind of where I've been over the past couple of days here. I haven't really done much, but today I'm actually looking to do something, and we're going to talk about that right now. You all know I'm in AMC, which I bought a couple days ago at $61.75. And this one, ideally, guys, I'm looking to offload today before the end of the week, because obviously today's Friday, heading into the long weekend. You know, no one knows what the heck is going to happen. So right now, I'm looking to get rid of AMC today, probably on any upside move, whether it's to $64. We break that, we go to 65. I don't know. I'm looking to dump out of it, maybe lock in some profits. And by the looks of it, $60, and this is a really good sign here, guys. $60 is holding pre-market. You can see that on the intraday chart. That held for a lot of yesterday, stemming from 1 p.m. on the East Coast. So for the last 3 hours of the day, 61 held. All of after hours yesterday, it held. And like I said, all of pre-market today so far, 60-61 is holding here on AMC. So I'm thinking, like I said, if we end up taking out the highs from yesterday, I mean, that'd be a perfect scenario. We fill the gap to 68. I'm hitting that sell button quicker than anything, right? I'm going to hit that sell button. And yeah, that's kind of what I'm looking at. And if we do end up dumping under, let's say 58, maybe 57, I don't know. I mean, this is such a tricky stock, guys, because over the weekend, anything could happen, right? Anything could happen. And I've mentioned before, this is, I'm not in this with a ridiculous amount of money. This is a fun money trade, quite honestly. So, you know, I'm back and forth on it right now, what I want to do with it. But ideally, I want to get out of it today just to play it safe. And yeah, that's ticker symbol AMC. So I'm going to put an alert at $64 per share right now, and we'll see if that ends up breaking. You know, ideally it will, for me at least. Probably won't, because when you want something to happen in the markets, usually the opposite happens. So we'll see what ends up happening. And I'm adding a fresh position today in my long-term account, and it is XLE. XLE is an energy ETF, and if you guys don't know what an ETF is, I'm sure you do. This is a basket of stocks, pretty much. In this case, since it's an energy ETF, it's a basket of energy stocks. And these include, I can't name all of them because this ETF owns like 25 stocks, but a lot of them are, you know, the big boys: Exxon, CVX, I believe they own some ConocoPhillips and a bunch of other ones. Again, I can't remember them all, but I want to get some broad exposure to the energy sector here, right? You all know that I'm in ExxonMobil. You know, that is my one energy play right now, and I got in quite early, in my opinion. You know, I bought this in the low 40s initially, added more in the mid 40s, low 50s even, high 40s, that general area, and now my average cost is at about, let's say, 46, 47, something like that, 45. I have to double check, because the truth is I don't check my long-term accounts every single day, guys, but Exxon is my main oil play right now. But like I said, I want to get into XLE, which is an ETF, which gives me even more exposure to the space, because quite honestly, You may think oil is done, energy's done, but I don't think so. I think it's just getting started. And the 4-hour chart does show, yes, we're at a high point on the 4-hour chart, but pull back a bit, guys. Pull back on the 3-year chart, and you'll see, wow, XLE is still down about, let's see here, about 30% from the 3-year high, and pulling on the 20-year chart, you can see it is down about almost 50% from that high back in 2014, and I truly believe oil could get back over 100 a barrel. These oil stocks, energy stocks, whatever you want to call them, they will continue to do well, and I want to be exposed to this. I want to have some exposure to not only the energy oil stocks that pay a nice dividend, but also gold stocks, which I ended up buying more GDX yesterday. You guys know that since you get all my buy and sell alerts. And these are more, I'd say, I don't want to say necessarily, I guess they are kind of defensive investments, inflationary hedge investments, but these are what I'm looking at. You know, it might not be the sexiest thing ever, the Teslas, the Neos, although I do own those, but at this point, I want to add more to these positions. So that's kind of what I'm doing today. I'm adding XLE, looking to dump out of AMC. I'm also looking at DKNG, which I didn't buy calls on this, like I mentioned a couple videos ago after that short report from Hindenburg. I was looking to buy those $50 calls again from January. I didn't do it yet. Maybe I do it. Maybe today, maybe next week. We'll see. I'm not looking to rush into it quite yet because I do own the shares at this point. And look, I like the way DKNG is maintaining $47, $48. That was support back in December, also back in January a little bit, also in the end of May, early June as well. So I'm thinking DKNG has a good chance as long as it breaks 50. So I'm going to put an alert at 50, which it hasn't done so yet, so be mindful of that. But if 50 does end up breaking, I want to see if this could fill the gap back to about 54, 55, which is where it was late last week, early this week, before that big hit report from Hindenburg. So yeah, watch out for that on DKNG. And Adobe, ADBE, we didn't talk about this earnings report yesterday, so let's bang it out right now, guys. Adobe did EPS of $3.03 versus $2.81 estimated, and revenue came in at $3, or not $3, gosh, guys, could you imagine they're making $3 a quarter? Yeah, they'd be out of business. $3.84 billion in the quarter versus $3.73 billion estimated. So beat EPS, beat revenue, and I believe Jefferies put them at a buy. That was one of them. And a lot of these analysts increased their price targets yesterday. We're talking Barclays, we're talking Morgan Stanley, Goldman Sachs, BMO Capital. Was Jefferies even one of them? Who cares, honestly? We got to take these analysts with a grain of salt, as always. But overall, the stock is on fire. We ended up holding 540 at a higher low. We bounced right off of it. We hit an all-time high at $572.50. Roughly. So at this point, I'm not looking to necessarily rush into Adobe unless it were to retrace back to the mid 500s, maybe 550, 540. Ideally, I'd like to get it at 520. So going back to what I said earlier in the video, patience. Patience is key. Sit on that cash until you get the right opportunity, and that's kind of what I'm doing now with Adobe. And Oracle is the last one for today, guys. They did EPS of $1.54 a couple days ago versus $1.31 estimated, and revenue came in at $11.2 billion versus $11.04 billion estimated. And the stock, although they beat EPS and revenue, the stock is down about 10% from the high. So this one's almost in correction territory, and I'm not sure why it's dumping like this. Maybe they didn't do well in terms of guidance. I'm not sure exactly. I have to look deeper into that. But overall, yeah, this is a big dip. I want to see if we end up filling the gap back upwards. So I put an alert at $79 per share. We end up breaking that into the 80s. I feel like we'd be in the clear to ride this back up. But until then, be careful, because there's always more downside in this by the looks of it, until, like I said, we get that confirmation of the breakout. So overall, guys, that is it for this video. That is the game plan for today. Some moves I'm making, some news from the Fed. Hope you all enjoyed this video, and I'm actually uploading this to YouTube, and I typically do this every morning for Patreon members and for the YouTube channel members. So if you guys want to see this type of content every morning religiously, I haven't missed a morning update video since I started the Patreon and the YouTube channel membership. Check those out. They're linked down below, or you guys can go to StasserFest.com/Patreon and you get all my real-time buys, sells, call-outs, moves I'm making on there. So check it out if you're interested. No pressure. And feel free to also get 2 stocks from Webull. Those are valued up to $1,600. All you have to do is use my link, deposit $100, and you get 2 stocks. I also get 2 free stocks since they're valued up to they are valued up to $1,600. Since it is an affiliate link, that's why I do get some stocks as well. I get a little kickback. So I'll catch you all later. Thanks for tuning in again. As always, keep crushing the market. Stay safe out there, guys. Peace out.